Hi guys, it's Jamin Cook with Secure Financial Management. I want to get you a video out on an update of a few things that we've been doing for our portfolios here and share some information with you about the title we put on this video, right? Which is about how investors, how portfolios survive downturns. I'm not going to talk a lot about the fundamentals of economics because those factors don't apply right here. In the fact, I talked to you a lot about what are we using to gauge the markets, to gauge our investment portfolio. Those things are almost irrelevant to this conversation. I talked to you that we look at interest rates, we look at unemployment rates, we look at things like that. This is a health issue that has spilled over into a financial issue. So a lot of those elements that we try and gauge investment decisions on don't relate at the moment. So I want to talk to you more about once you're in a downturn like this, when what we call a black swan event, like a virus coming out of nowhere that was unexpected, once you find yourself in that situation, how do you survive it? What do you do? Okay, so I want to talk to you about some things you should consider for your personal investments and what we're doing here for our clients, okay? So the first thing that we've always had set up is if you're taking cash distributions, a lot of our clients are retirees, not all of them, but a lot of them are retirees. And then a lot of those guys are taking distributions, monthly distributions, to supplement income, pension, Social Security, whatever it might be. So there's always cash or cash-like vehicles that we can get access to that have limited or no effect from market forces. So whether that's cash, short-dated bonds, ultra-short-term bond funds, things of that nature. Most of our clients have 18 to 36 months of distributions that we can get them from their accounts. That while this is not fun to go through and it's not fun to see portfolios go down, that cash distribution to them is not in danger, and we can continue those distributions without having to sell any of our losses and essentially realize the pain that we're going through right now. Okay, so that's the first thing, is that making sure that there's always cash distributions available that we can ride out difficult times like this. Okay. The second element is looking at rebalancing of the portfolio, where we can take the areas that have not been affected by this market turmoil and look at maybe taking some of those positions and rebalancing them into our equity positions, right, to take advantage of those depressed prices. Any good diversified portfolio, the whole portfolio should never go up all at the same time or go down at the same time. If you've got a portfolio that everything is going in the same direction all the time, then it's not really diversified, okay? But what we can look at is taking, if we had some gold positions in those portfolios or some areas that were not impacted by this market downturn, and looking at rebalancing now, because our portfolio now is out of balance anyway, right? Our equity position is not what it used to be. It doesn't represent the true percentage of the portfolio that it was. And our other areas that have not been affected, that were diversified away from the markets to a point, they're a higher allocation of our portfolio right now. So we want to look at rebalancing and trying to take as much advantage as we can of a bad situation. Okay, so that's the second thing that we can look at doing. The final thing I want to leave you with here, it's been a crazily busy week, couple of weeks, especially this week, talking with our clients, meeting, discussing strategy, as you can imagine. One of the things that we're hearing a lot, understandably, is, hey, can we do something where we just freeze our account, right? Hey, it's gone down. There could be more pain to come. Usually these situations take months to work out, right? There could be more pain to come, and that's exactly right. There could be. I don't know, and anybody who tells you they do know doesn't really know, all right? Because we don't know exactly how this is going to play out. Can we freeze our account here? Essentially what that's doing, right, is if you freeze your account, or we stop the pain, is you're selling your account. You're going to cash. And the concern with going to cash in situations like this, and what we have now officially as a bear market, is that when are you going to get back in? I don't know what that date is. I don't think anybody can tell you what that date is. When are you going to go back and say, all right, now everything's over, we're going to go back and reinvest? The chances are almost guaranteed that you're going to miss whenever that turn in sentiment, whenever that turn of the markets is. And if we freeze the account, or if we take those positions out and go to cash, we've guaranteed that we're not going to make up those losses, right? What's playing out in the market is classic bear market mentality right now. The Dow, the S&P, whatever you follow, is down huge. Often the next day it's up big time and then it's down huge again. And it plays out time and time again that, hey, the market's down huge, I'm going to get out. The market's up big the next day, hey, it must be over, we're going to get back in, only to be disappointed again the next day. And now you're compounding your losses because you didn't even get that gain from the day before. So unfortunately in situations like this, we're limited on what we can do, but we do what we can. If we need cash, we make sure we've got those distributions and we don't have to raid our equity positions and take losses to make sure those cash distributions stay in place. We want to take whatever we can from our assets or our portfolios that were diversified away from the markets and look at taking portions of that and buying in and rebalancing our portfolio while those equity positions are low. And we make sure that we're not being scared out of our positions. It's scary, no doubt, for everybody who's involved in this. But trying to time the market, play the market, freeze the account, and say, hey, I just want to get out until this is all over, I'm not going to know exactly what that date is, and I don't think you guys will either. So making sure that we're situated to ride out this event is what's going to be important. I know things are difficult right now, guys. Everybody's in the same boat, unfortunately. Let's hope that this all resolves itself soon for the benefit of our finances and for society in general. If you've got any questions about what we've discussed or you want to talk about your portfolio, a lot of meetings we already have on the schedule with you guys, but if we haven't had a chance to book something with you guys yet and you want to talk, please let us know. Also know that nothing that we discuss here should be considered a recommendation. If you want to talk about your personal situation, give us a call here at the office, 210-428-6250. We'd be happy to speak with you.